Welcome to The Explainer. Today, we're talking about something that can feel like a bonus at the end of the tax season, your income tax refund. But, it's not really a gift. It's the government giving you your own hard-earned money back. So, let's get into it.
I mean, that's the big question, right? If you've paid even a little bit more tax than you were actually supposed to, then yeah, the answer is yes. And in this explainer, we're going to break down exactly how you can track down that money and get it back where it belongs.
All right, so before we start chasing the money, we have to be super clear on what a tax refund actually is. Let's start with the absolute basics.
To put it simply, a tax refund is just the government returning your overpaid tax. See, throughout the year, money gets taken out as TDS, or tax deducted at source, and maybe you've even paid some advance tax yourself. If all those payments add up to more than what you actually owe for the year, boom, you're getting a refund. It really is that straightforward. That is a fantastic question. You might think, hey, my calculations are spot on, but you'd be surprised how common it is to overpay. So let's look at the main reasons this actually happens.
And what's really interesting is just how many ways this can happen. Maybe your employer took out a little too much TDS, or maybe you were just being extra cautious and paid more advance tax than you needed to. It could even be something like claiming relief under a double taxation avoidance agreement. That's the thing that stops you from getting taxed twice on the same income in different countries. Any one of these can lead to a refund.
Okay, so you've filed your return, and you know a refund is coming your way. So, what happens next? Let's follow its journey, right from the moment you hit that submit button all the way to when it lands in your bank account.
And this is the roadmap, right here. First, you file your return. That return then zips over to the Central Processing Center in Bengaluru, where they check it. If all your numbers match up, they calculate your refund, issue it, and send the money straight to your bank. It's a pretty clear four-step process.
So the big question, how long does this all take? Well, while it can definitely be faster sometimes, a good rule of thumb is to expect about 20 to 45 days, and this is the important part, after your return has been processed successfully. A little pro tip, filing early in the season usually helps speed things up.
The good news is you don't have to just sit there and wonder where your money is. The tax department actually gives you official tools to check on your refund's progress. Let's look at the toolkit you can use to stay in the loop. So, you've got three main ways to do this. First, the income tax portal itself has a whole section for checking your refund or demand status. You can also use the NSDL website. That's the platform that handles a lot of tax-related info. And probably the easiest way? Just keep an eye on your phone and your email for updates sent directly from the department.
Of course, life happens and sometimes things don't go as smoothly as we'd like. But don't worry, most of these issues have really straightforward fixes. Let's go ahead and tackle some of the common hurdles you might run into.
This is the number one question we hear, hands down. You've waited past that 45-day mark, you've checked the portal, and it feels like nothing is happening. So what do those cryptic status messages actually mean?
Think of this table as your secret decoder ring. Refund issued is exactly what you want to see. It means the money is en route. Now, refund failure almost always points to a problem with your bank account details. And if you see refund adjusted, that means the department used your refund to pay off an old tax bill you had from a previous year.
But what if the delay is totally on the department's end? I know it's frustrating, but there's actually a little silver lining here. If they take too long, they are legally required to pay you for the inconvenience.
And the magic number is 0.5%. Now, it's not a huge amount, but it is mandated by law. So how does this actually work?
So, under Section 244A of the Income Tax Act, if your refund is delayed for more than 3 months, you are entitled to get interest at a rate of 0.5% for every single month of that delay. It's the law.
We've covered the whole process, the timeline, the common problems. Now, let's boil it all down to the single most important action you can take to make sure you get your refund without a single hiccup.
So this is it, the big one. After looking at all the reasons why refunds get stuck, one reason stands head and shoulders above all the rest.
This is it. Seriously, the most common reason refunds fail or get delayed is simply because the bank account you've chosen hasn't been pre-validated on the income tax portal.
And this part is absolutely non-negotiable. Pre-validating just means you've officially confirmed with the tax department that yes, this bank account is mine and yes, it's linked to my PAN. Without this step, they simply cannot and will not credit the refund to you.
So we'll end on this one crucial question. Before you even think about tracking your refund, just log into the portal and make sure your bank account is pre-validated.
It is the single best thing you can do to avoid any headaches down the road. Thanks for joining us on The Explainer.